There's been a long-standing debate on whether credit cards are good or bad. Even two big shot sharks can't seem to agree on it.
If you use your credit cards, you do not want to be rich.
I recommend that everybody have at least 2 credit cards.
Now here's my take. Credit cards aren't inherently good or bad. It just depends on how you use them. Use them wrong and they could be a wrecking ball for your finances. But use them correctly and they could unlock powerful benefits. Choosing the right card and using it wisely can help you build credit, save money, and enjoy a range of added perks. But of course, no one really teaches you what credit cards are and how to use them properly. And so in this video, I will. Let's dive in. So first, what is a credit card? A credit card is a financial tool that lets you borrow money for purchases. At the most basic level, here's how they work. When you use your credit card to make a purchase, the credit card issuer essentially covers the cost on your behalf with the expectation that you'll pay them back. This is why credit card companies assess various factors, including your credit score and income, when approving you for a credit card. It's a way for them to do their due diligence and feel confident that you'll eventually pay them back. Each month, you'll receive a bill showing the amount that you spent and what you owe, and you're given the option to pay the entire balance off in full or pay the specified monthly minimum by the due date. If you pay your balance off in full, you're golden. But if you choose the monthly minimum or you miss a payment altogether, you'll be charged interest plus any applicable penalties. In a nutshell, that's how credit cards work. But now let's dive into the key characteristics so you know how to select the right card and use it properly. First, it's important to understand that there are different types and tiers of credit cards. Credit cards come in various types, each designed for specific needs. For example, standard credit cards are geared towards borrowing money and improving credit scores, while balance transfer cards help with paying off high interest balances by moving them to a lower interest card. Then there's rewards cards that offer incentives like cashback, miles, or points based on your spending. Also keep in mind that many cards offer introductory benefits like sign-up bonuses, lower interest rates, or higher rewards that last for a limited time. Credit cards are also categorized into different tiers based on individuals' credit profiles. Entry-level options like the Capital One Platinum or Discover It Secured could be suitable for those starting with credit cards or facing credit challenges. Mid-tier cards from banks like Chase or Citi offer cashback or travel rewards, and premium credit cards such as the American Express Platinum or Chase Sapphire Reserve provide exclusive perks like airport lounge access, but they can be selective and challenging to obtain. It's important to choose a credit card type and tier that aligns with your financial goals and creditworthiness. Next, let's talk about other benefits. Credit cards typically offer better fraud protection compared to debit cards. So if your credit card is used fraudulently, you're usually not held responsible for the unauthorized charges so long as you report them promptly. Some credit cards offer additional benefits such as travel insurance, rental car insurance, extended warranties, and purchase protection, providing you added value and protection for certain transactions. Next, let's talk about fees. Credit card fees can vary significantly among different issuers and depend on the type and tier of the credit card. It's important to carefully review the terms and conditions of any credit card that you're considering and understand the associated fees. For now, I want to touch on 2 common fees: annual fees and late payment fees. Not all credit cards have annual fees, and the presence and amount of the fee can vary widely depending on the type of card and the benefits it offers. When choosing a card, it's important to evaluate whether the perks and rewards justify the annual fee. It's a personal choice you have to make, but if you're currently shopping for your first credit card, I would highly recommend opting for a fee-free credit card for one simple reason. Your first credit card significantly impacts your credit score since it establishes the length of your credit history. If you choose a card with an annual fee that you later find undesirable, you'll be faced with a dilemma. Closing the card could harm your credit score by reducing your credit history, or you might end up paying an annual fee for a card you no longer want just to maintain your credit score. To avoid either scenario, opt for a fee-free credit card for your first one. Next, let's talk about late payment fees. Late payment fees are charged as a penalty for failing to pay at least the specified monthly minimums by the due date. But you can totally avoid paying this fee by simply making your payments on time. Next, let's talk about annual percentage rate. The annual percentage rate, or APR, represents the interest you'll pay on any outstanding balance when you don't pay off your credit card in full every month. Credit cards are notorious for charging significantly higher interest rates compared to loans like mortgages, primarily due to the risk the credit card company takes on. Unlike mortgages, where the bank can repossess your home if you fail to make monthly payments, credit cards lack such collateral. As a result, credit card interest rates tend to be much higher because there is a greater risk that the lender may never fully recoup their funds. One thing to note is the advertised APR will typically be shown as a range. Your actual APR will depend on your credit score. A higher credit score is generally associated with lower credit risk, so individuals with higher credit scores may be offered lower APRs. You'll find out your APR once you're approved for the credit card. All of this information is good to know, but you can avoid paying interest altogether by simply paying off your entire balance in full each month. Next, let's talk about credit limits. Once your credit card is approved, along with receiving your APR, you'll also receive a credit limit. Your account will have a credit limit, which is the maximum amount you can borrow. Unlike a loan, you don't get all of this money at once. You borrow as you spend on the card. It's recommended to keep your credit utilization below 30%, meaning you should aim to use less than 30% of your credit limit. This is because credit utilization is a key factor in your credit score calculation. It signals to credit rating agencies that you're effectively managing your credit and are not overly reliant on borrowed funds. Now let's talk about the monthly billing cycle. Credit cards operate on a standard billing cycle that typically spans about 30 days. During the billing cycle, each time you make a purchase on your card, this is added to your credit card balance. The billing cycle ends on what's called the statement closing date. On the statement closing date, a few things happen. First, the credit card company calculates what you owe and issues you a credit card statement. And second, they typically submit your credit utilization ratio to the credit agencies based on your balance on this date. Credit card companies typically give you 21 days from your statement closing date to make your credit card payment. The period between the statement closing date and the due date is known as the grace period. And during this time, no interest will be charged to your account. You're given the option to pay the balance off in full or pay the specified monthly minimum by the due date. The monthly minimum is typically 1 to 3% of your total credit card balance, and that's the minimum amount you must pay by the due date to keep your credit card account in good standing. If you pay your balance off in full by the due date, you won't be charged any interest. If you don't pay your balance off in full by the due date, meaning you carry a balance, you will incur interest charges based on your APR. If you miss your payment altogether, along with interest charges, you'll also be charged late fees. Bringing together everything we've talked about so far, let's talk about how to use credit cards properly. First, choose the right card. Select a card that matches your spending habits, financial goals, and credit profile. Consider factors like your credit score, interest rates, annual fees, and rewards when choosing a card. Next, understand the T's and C's. Read and understand your credit card agreement, including interest rates, fees, rewards programs, and introductory offers. Know what you're signing up for so you can make informed decisions. Next, pay your balance off on time and in full every month. To keep your credit card in good standing and avoid any late fees, pay at least the minimum payment by the due date. But keep in mind that this is only a tiny fraction of your total credit card balance, and if you only make the minimum credit card payments, you will quickly accumulate interest and your debt will build quickly. To avoid paying interest altogether, always pay your credit card balance on time and in full every month. Next, automate your payments. Set up autopay to avoid missing deadlines and ensure your linked account has sufficient funds to prevent overdrafts. Next, spend wisely. Stick to your budget and spend within your means, and avoid spending more than what you can comfortably pay back in full each month. Next, be mindful of your credit limit. Stay well below your credit limit to avoid overextending yourself. Keep your credit utilization below 30% throughout the month, especially before the statement closing date, which is when the credit card company typically submits your credit utilization ratio to the credit agencies. This can positively impact your credit score. Next, avoid rewards chasing. If your card offers rewards or cash back, don't let this tempt you into overspending. The benefits will never outweigh the penalties you'll incur in the event you spend more than you can afford to pay back. Next, never use a credit card to withdraw cash. Cash advances often have higher interest rates than regular credit card purchases, and the interest may start accruing immediately from the date of withdrawal. Next, avoid using it for emergencies. Make sure you have an emergency fund to fall back on, because having a financial safety net can prevent you from accumulating credit card debt during emergencies. And finally, monitor your statements. Regularly review your credit card statements for any unauthorized charges or errors, and report these discrepancies to your credit card company as soon as possible. So what are the benefits of using a credit card? As we've talked about, choosing the right card and using it wisely comes with numerous benefits. Rewards programs, for instance, offer opportunities to save money, while additional features such as fraud protection and insurance provide an added layer of security. However, arguably the most significant advantage of using a credit card is its potential to help you build credit. We'll dive deeper into the intricacies of credit scores in a future video, but for now understand that credit cards play a pivotal role in establishing and improving your credit history, which you will need if you ever want to secure favorable terms for a loan, lease, or a mortgage. Now here's the flip side. If you don't use your credit cards responsibly, they can cause serious problems by leading you into debt and actually hurting your credit score. So use what you've learned in this video to your advantage and make sure you're in control of your credit card and it's not the one controlling you. I would love to know, do you use credit cards? And what other tips would you share for those just starting out? And for those learning about credit cards, let me know if this video was helpful to you and if you have any questions. I'm genuinely interested in helping, so let me know in the comments and we'll continue the conversation there. If you've made it all the way to the end of this video, don't forget to like and subscribe to support this channel. It would mean a lot to me. Thank you and see you in the next video. Bye for now.